This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. We saw some pressure come into the market here to start today's session, but rebounding nicely as some of those trade concerns kind of dwindle a little bit. But right up against technical resistance for that March corn contract, we've laid this out as 385 to 387. This is recent resistance. If we can achieve a consecutive closes out above this pocket, I wouldn't be surprised to see funds step in and extend their length a little bit. The next line in the sand for resistance, 390.5. This represents the recent highs back in October and November. The chart looks fairly constructive. We like being on the buy side, but against resistance, not so sure. I think you're going to want to wait for a little bit more of a pullback. Looking at very technically significant support, 376 and 3/4 to 378 is a 50 and 100-day moving average. This is an area where I would love to buy. I'm not so sure we're going to get back down there. But that would be the spot to, I think, back up the truck as far as a risk-reward perspective goes. Now, moving over to the soybean market, a little bit different of a story. We had 4-star technical support in our daily grain research, 893.25 to 897.5. This represents previous resistance, the gap from Sunday, as well as a key Fibonacci retracement level. This was a buying opportunity on the first test. We kind of bounced off of that, but really kind of back in the middle of no man's land. If you're able to buy that, maybe reduce your risk, as I think this market becomes a little bit more range-bound on the resistance side of things. 919 to 926.5 is the pocket that the bears want to defend. If we do achieve a closeout above there, I think we go retest those July 31st highs of about 932 and 3/4. Wrapping things up here in the wheat market, we like giving wheat a chance to the buy side. It needs to hold 510 for that March Chicago contract to really have us feeling comfortable. We've traded lower the past 2 sessions, but have come off those lows relatively nicely, which is good to see. But the bulls really want to see a closeout above 525 to 529. This has had a recent resistance as well as a 50-day moving average. If they can do that, I think this accelerates the market, encourages short covering, and takes us a little bit closer towards that 545 level. So that's what we're looking at here to wrap up the week. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.